The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 6th of June. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon at 877-927-6648. Hey, I'm going to give this a try. Let's see if we can get someone from the international sphere. I know you're out there. 1-727-445-1044. There must be some other number that you have to dial. Well, whatever the number is to the United States, you need to dial, obviously. So, yeah, very interesting day today after a really sharp decline yesterday, closing at the lows. I'm watching this, and there's an indicator that I developed many years ago, and I keep refining it over a period of time. And that's the Chapman Wave Trend Gauge, and that's based on, I do nothing else but base it on Richard Arm's Trend Index. I make a modification in the numbers. Actually, I don't even know how he uses it anymore because I've just not used it. I've never used it the way he uses it. That's not to say that he hasn't got a fantastic way of using it. It's just that I've used it in a very different way, as I do with all my indicators. I tweak it and I assess it and look at them in different ways. I had a lovely email from one of my subscribers saying, absolutely, the toolbox is the most important thing. You've got to have many, many tools. You cannot rely on just one or two or three, because there are moments when they are not applicable. They are just not applicable. You get to the summer months and everything just dies away. So your numbers and everything, all sorts of things change. That might be when moving averages are the most important. The 9-period moving average or your Fibonacci numbers. You got to have a box of tools. So in this box of tools, what it said was within 1 to 2 days from intraday yesterday, it gave a technique that I use that says it could start immediately, but normally within 1 to 2 sessions, there should be a move that starts in the S&P E-minis, the nearest contract that you're trading, and there should be a move of between 7 to 9 points, and that should be carried over into the S&P and the Dow. I also use this very same tool, and it's only based on the Dow. I don't care what the S&P or the NASDAQ, it's the Dow, and it gave a fantastic indication the other day. It worked its little wonders there. So I don't know if it's going to fail, but I don't know if it's got a half success rate already, because this morning the futures really were up 1.9 points, and certainly from the low it was way more than that. So I use the technique saying that it should flow through into the general market. So at this point, I'd give it a half a point, but I'd probably say, hey, I think it's going to be a miss if there isn't a decent rally into the close today. With the S&P, I would say at least up 7 points. And that's all it does. And then it's done. It's finished. You have to use other indicators after that. Now, there are a couple of things that I'm showing you here right now. In the Chapman Wave methodology, it's a really simple technique. You look for the lowest, most identifiable low bar, and you expect at least a peak D. In the E-minis, that is the June contract E-minis. Look at this. From the low bar of June, the week of June 1st at 1248 in the E-minis, it went to where? Peak A, peak B, peak C, peak D, and then the doji high on the week of the 5th of October, 1451.00. Funny, there's two round numbers at the bottom of the top come in, and you've got peak D, the fourth highest peak. That's what you're supposed to get, fourth highest peak, and whoops, you pull back to where the 200-period moving average. You start a brand new buy signal, 1331.25. There goes to a buy mode based on the technicals of the stochastic of the MACD, which I love to teach during my workshops or webinars or Master Trader series. And where does it go to? It goes to peak A, B, C, D. And at D, something else happens. The MACD, the moving average convergence divergence, the green line here, above the red line, is still very positive, and the stochastic is still above 80%. And what's it do? It goes to an E, and then it pulls back. This could recycle if any time in the next 2 weeks or so, I'd say no more than 3 weeks, there is a new high, a recovery high above 1685.75. That'll be amazing. And it cannot break. I would say it cannot break under 1588 to do that. And then you might even have recycled up to a brand new leg B, let's say. Meantime, it's a peak E, but I haven't got a confirmation until Friday, tomorrow at 4 o'clock. If it closes decisively underneath the 9-period exponential moving average and the MACD crosses negative, I have to put a down arrow. At this point, it's just a plus sign which says be careful, because some kind of consolidation is taking place. In the daily chart is called a sell signal that's gone to a sell mode. All it is it's giving you an idea of the dynamic thus far. The sell mode also implies very often that you should go down to at least a trough D, but it doesn't have to do that. On the way up, a buy mode implies you have to go to a D. There's slight variations in the two techniques, going up and going down. Question, Basil, how does a signal go to a mode when I get a close below the 9-period moving average together with the MACD turning negative? Now, does that mean it cannot recycle and go to another peak? Yes, it can. And then I put that little V, inverted V, the little caret, the little upside down dunce cap on the top to say, hey, is that a right arm extension, just like your IM over there has a right arm? You're raising your hand, that's the right arm extension, and very often it'll come down sharply. I've got I have built up a library. I was just looking at it the other day. It is uncanny how many charts I've got under every single category. Right arm extension, rogue wave, the works. But what I'm doing now is I'm filtering them. I'm going back to them to say, do you absolutely meet every criteria so that it is visually perfect in giving the representation that you want? And then I'm going to wean those, and I'll probably have a class at some point, sometime in the summer, I hope, where I'm going to go just for the absolute best ones so that you can identify it, use it as a template. So what does it say? It says within the Chapman wave methodology on the daily chart of the E-minis, you've got the left side, right side price time match, which should come in around about the 14th of June to break 1595, 1596 to 1595 key support on the left side of the E-minis. By then we might have changed the contract. Doesn't matter. I'll have them all updated next week on the new contracts. These are still tradable. And on this particular one, the resistance is 16.30. Left side, right side price time match. And that inside wedge, Chapman wave inside wedge target line gives you, in fact, the parameters. Now, there could have been a much steeper one going to a low today, but for my subscribers, my opening call subscribers, we have longs. In fact, we just added another long yesterday, even though it's a starter position, knowing that it's going to go lower, and we're going to try to buy a little more at a lower point. I still wanted to get that position for a number of reasons. However, we are in the position right now of being triple short the S&P. With a fabulous gain on a percentage basis, but that gain's going to be minimized. I know that there will be some kind of a pop-up coming up here, but because in many of these charts in my inversion ETFs, in other words, the dog is the 100% short, the diamonds, the DIA, which is 100% long. So in these inverted ETFs, many of them are only in leg C, even though on the downside you've got leg D in some of them. So I'm using those as I'm using the root going to support levels. Let me just run these through. I'm going to go to the Dow is up 18 at 14,979. The S&P is up 3.57. 3.57 to 1612. The comp index is up 5 at 3407. You got gold up 6, almost $7. This is fascinating to me. At 1405, silver is up 0.04 at 22.3. Now platinum's up quite nicely. I hope I get a chance in a few minutes. I'm going to do that. I want to look at platinum. It's a really nice looking chart. High grade copper has been improving a little bit. Crude oil is up at 94.98. Bonds are up 11.30 seconds at 141. This is going to be an interesting day. And the dollar is down 0.58. Let me just quickly do this. You see the peak in the Chapman wave methodology on the dollar. Look at this on the E-minis. Dollar DXY, this is the index. Plop. peak E at 84.50, left side, right side price time match. Oh, I never finished doing that, but I have a target for the dollar of support at 81.58. If that breaks, the dollar's testing 81.33. The left side low of the 1st of May. The weekly chart has gone to a peak E, and I haven't got the down arrow yet, even though it's a very sharp pullback from a cup formation, making a handle possibly. But in the meantime, you've got, this is amazing to me, leg D up in the euro, EUR, USD currency pair, euro dollar currency pair. Look at that beautiful cup formation, and it's forming in the. This is so interesting. I tell you, now I really should get to back to trading. I haven't done for ages, getting back to trading the currencies. The Chapman wave I love the way it works on these things. But let me tell you something. They move really quickly. So you might have your everything else down, but unless you've got a fabulous technique, you better be real quick with these currencies. Not that other things don't move quickly, but the currencies in particular. One thing about currencies is that usually when they set themselves up like the dollar or the euro, invariably they go for a lot. They can go for 1 year in a trend. They trend for much longer. This is the first time I've seen such choppiness not the first time. This is the first time in quite a while, since I'd say sometime last year, that I've seen this kind of choppiness within a trading range. Because if the euro actually continues rallying, it could go to 1.33. It's at 1.319 right now. And as MMS in the Den says, yeah, currencies trend. There's a big difference between trending and having to play these short, quick moves all the time when you have a choppy market. However, we've been trending in the major markets. So let me do this. I don't want to finish up here without just completing my thought, because I do want to go to our next caller. I think I'm going to use the end contract. I don't know if that's right. But look, here is the platinum chart, and platinum is making leg B up in the weekly with the technicals concurring. But it's most important that you look at, this is A, B, a long hesitation, and then A, is there another? Yep, there it is, A, B. This is now a parallel wave count in leg C in the daily. It says, yeah, there's a good chance one of the platinum chart, that platinum go from 1.527 to 1.553. Oh, that would be an interesting move. I want to put this into other context, but I need to go to our first caller because this is going to be a good call. Hi, Mark. How are you? Mark in Denver.
Good. How are you, Basil?
Very well, thank you. You'd like to look at?
Yeah, funny you should talk about the currencies. I wanted to look at the FXD. I was thinking it looks like it's in the leg D or in
absolutely.
The daily.
I've got it all notated. Do I hear music in the background? Do I hear music in the background? I think I do. I don't always. It's just other noises. Let me do this until I. Let me tell my engineer, please just say 10 seconds or something when it comes up. No music. Okay, good. There it is. I knew it was coming up. You see the gap? That gap with the doji at the bottom of the FXE, which is the currency shares Euro Trust, trading at 130.70 right now. That gap on the 27th of March at 126 went to a peak F. It's pulled back, and now it's in leg A, B, C, D. Oh, this is going to be interesting to do. I'll be right back. And I'm hearing things. I'll be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and I've just done something I call it goes under the category of chutzpah. And it's a great book written by a lawyer, and he's over at Harvard. You always see him on, and he's defending everybody, not so much anymore. Someone will tell me in the den why I'm forgetting his name. I've seen him so many times. Anyway, it's a great book, and I say that because what I've done here is I've drawn the Gartley. And Dershowitz, thank you, Terry. And what I've done with that Gartley is because the more I've worked with these patterns, the more I say, wow, these are patterns that I used to draw all the time. When I look at I've got it right here. When I look at my old notated work, I used to draw trend lines and then join the trend lines to make certain patterns. So what happened here is there are a bunch of patterns that I'm looking at, and I'm on with Mark in Denver, and we are looking together at the FXE. Mark, do you have a position?
I was going to scale into some puts, but I wanted to talk to you first.
Oh, you're looking at the put side?
Yeah.
Okay, but you haven't got anything yet?
No.
Okay, so this is what I'm looking at. There are a whole bunch of things that are very important. There's a pattern that I talk about a lot, and that is the pattern that looks like an H. I'm going to draw these patterns until I'll use this as a little study piece. There's a line that comes down. Sometimes it's vertically down, but very often it's a horizontal line. And then there's a bounce, and that's the price. And then there's a bounce that makes an H pattern, lowercase h. If the lowercase h is successful in not testing or not breaking the left side low, and then starts a rally, very often that rally can be very powerful if one of two things happen. One is it decisively takes out and closes above the previous arch high of most importance, and in this case that arch high would have been this one right here at 130.76 on the 8th of May, and you can see we're above it now, but it hasn't closed yet. And if it does that, then there's a chance it's going to take out the most important left side arch, which is this one here, which is what I call the right arm extension, where we went to peak F on the 1st of May at 131.06. Now, I've done something else. I've done a left side, right side price time match to the most important candles that I've got here, and that takes me to when? It takes me to the 13th of June, and it says this rally, if certain conditions are met, has a potential not only to rally nicely, to continue rallying that is, but to rally to the high, in this particular case, of the high of the 25th of February at 131.93. Now, it doesn't sound like very much, but you know with the currencies that sometimes just getting to that extra 1 point or more, I'm talking about the ETFs, this is the Currency Share Euro Trust, they can sometimes struggle when you think they're just about to make it, they don't get there. So I look at other things. Now, the choice of left side, right side price time match to make the cup formation is very important. That leads me to two things that are, this is the second part of it, that the pattern then becomes a large bowl or cup formation, a very powerful, I call it the Sears Holdings pattern that I recognized way back, purely almost by accident, because there was a successful test of the left side low, and it gave a massive move to the upside. I can't remember if it actually went back to the previous high, but it was a big move, and it had this exact pattern of a move that comes down, makes the H pattern at the lows, successfully tests it, and then runs back up, but it has to clear very decisively the level of, what did I say, 131.06. I'll type it in because we're going to be looking at this a couple of times to do this analysis. Here's the next thing. What else do I look for? Well, in the Chapman wave, we've got to be looking at the technicals, and the technicals, I always imply the MACD and the stochastic. I also always imply the 9-period moving average. Well, that's not an issue now because that's rising. It's 129.32 is the support, but it is about today to cross the 200-period exponential moving average. When it's done that previously, it's done it, and there's maybe only 1 bar or 2 bars left, and then it's going to come back down sharply and retest that line and even break it. But there's a difference here. The MACD is still climbing. That green line you can see, if you're looking, are you looking at Tiger TV? Can you see my chart?
I can't see right now, but
okay. Well, if you have a chance to look at the archive, you'll be able to see. I hope you'll be able to see it. And what I'm showing is that it's starting to rally. The MACD is still rallying very strongly, but the stochastic's at 90.88. The last time the stochastic was at 90. Let me just see here. The last time that the stochastic went into the 90s was it went to 91 back on the 11th of April, and there were 3 days to go before it made that peak E-top, and the MACD was expanding. But the stochastic was starting to decline. This one is still rallying. So I'm holding off. I don't want you to take any put side yet, and I want to finish the analysis, and then we'll look at it together as to what might be a good game plan. We'll be right back straight after this break, and hold tight. We'll be back with Mark.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of tfnn.com.
Hi, everyone. Basil Chapman. We're going to finish up that analysis that I was doing on the FXE, and this is what I'm looking at now. The stochastic and the MACD are getting close together. If you look at the previous one, it had the Chapman wave squash, the thing I call the squash. And that takes you really quickly to a COD, and then it pulls back as the stochastic starts to fail. It'll go to a new high, but you've got to be real careful because it can come down sharply, which is dead. This one is much more steady. I'm looking at this and I'm saying, currency shares, Euro Trust. You should right now be looking at weakness in the towards the end of the morning session, some kind of weakness, and I'm looking at strength. And in the 120-minute chart, I've got ABCD, A, B, C, D, and this is probably an E. Could even have recycled to ABC. So it's E/C. And the MACD and stochastic are very strong, a tad overbought, but you've got the magnet of 130.76 from the 8th of May, which is just touched, and then the next one will be 131.06, which goes back to the end of April. So I'm looking at this and I'm saying, I don't see a put position. It can happen suddenly in a shorter term in the currencies, and you can see exactly what happened when it went to D, E, and F last time. There were quick, sharp pullbacks. I like what I'm seeing, and if I'm correct about this pattern that I'm looking at here being very strong, there's a good chance it could climb towards the 130. 131.06, and then the 130, what did I say it was, 131.93-ish area from way back in April. So I'd be hesitant to look at the put position at this particular time. So you might then say to me, all right, what would I be looking at for a failure? Well, I'd be looking, first of all, the monthly chart would the weekly chart would start legs. The monthly chart is not good at all, but the weekly chart is making this pattern that produces two very powerful V or U-shaped patterns, and that would be very strong if there is a weekly close above 131.06. I'd put it at the 131.80 to 132.20 area. That would say, don't do anything, because 132.51 is the 200 period exponential moving average, and there's a lovely divergence between the stochastic and the price, and the MACD is just about, maybe tomorrow, you'll see for the first time the MACD turned positive, crossed positively. Wow, that would be the first time since it crossed positively back in the week of the 24th of August of last year. So I'm going to say to you, I don't see the put position yet. If it's a very short-term trade, I'd use the 120-minute chart. I don't think that's what you're looking at. You're not looking for a quick trade, right? You're looking for a position trade that maybe can even go into options expiration. Would that be correct?
Yeah, I was actually thinking of even going out to July, but I can...
See, July is different, but then I wouldn't give up points just because you say, I'm going to be right, because you might be right, but it only comes back to where you shorted it, you lost your premium. Right. I'm going to do two things. One is I'm going to ask you to call Victor Jones, because this is really the type of strategy that Victor looks at would be exactly, I think, fitting the options hour, 3 o'clock. It's straight after my show on a Tuesday. Yeah, straight after my show on a Tuesday. It's just maybe that the ideas will be, the ideas and the experience will be much clearer than what I can give you right now. The only thing I can say is that when it gets to this little double top, very short term, you could get a pullback back to 129.98, maybe even 129 or 128 at 28.80. That's a nice pullback on a put option, but boy, the timing has to be perfect. Yeah. So I don't think it would be remiss on my part to start telling you that you should not do it. But based on my work, I'd say that the timing, I would rather wait a little. I'd rather have you impatiently wait and maybe miss a little bit of an opportunity for the best price, but to get a good price, than to be early and watch the premium just shrink away. So, and you can see what I'm doing here. I'm looking at it, and I don't yet see the negativity. I just don't see it, because the MACD and stochastic are very strong. Hope that helps you.
Helps me a lot. Thank you.
Thank you so much for calling. Good eye, but I think it's a little early. Okay. So, okay. Thank you. Now, this is what I want you to do. I have to do this. I had it right here. If I go through the day and I haven't done it. Boston Globe, Thursday, June the 6th, 2013. Headlines, big roles for two longtime Obama allies. Of course, there it is. But right under it, in, I would say, 3/8 of an inch. I can't remember what the pica measurement is. I used to know those things. But the font measurement is higher rising Boston. The latest tower plan is at Government Center Garage. God, that Government Center. That and the Prudential, two worst buildings, and the new public library, with new 1976 or something. No, it must have been 73, 74, I saw them building it. Ugliest buildings. Love the Hancock, one of my favorite. So now what it does is it shows you high rises. It says, once openly hostile to tall buildings, Boston is finally embracing the age of the skyscraper. In the book called The Psychology of Investing, I have a whole section in the chapter called Height as a Measurement of Man's Ego. I can't remember what the exact title is. I shouldn't have mentioned that until I knew. I'll tell you right now. Oh, it's right there in TFNN, front page of TNN. Go to University or Education and you'll see it right there. And it says, skyscraper phenomenon 172. Let's go to that one, 172, page 172, published by Riley. There you go. The heights of buildings rise commensurate with the stock market. The skyscraper phenomenon refers to the way each new generation of skyscrapers demands cutting-edge technology. Otis developed a new elevator system in the 1920s, soon after used for the extended height of the Empire State Building. They could not have built the Empire State Building without the Otis elevator. I spoke a lot about how Apple had taken all these technologies, the Gorilla Glass, to be able to make just the right strength, very strong screen. The microphones and earphones were they were brought down to size, but they were very, very clear. You couldn't have done that. It's like the skyscraper perfect phenomenon of the Empire State Building was exactly the same with the whole aspect of the iPod, the tiny ones, where it could do so much, and it was an innovation that you'd never seen, couldn't even experience, you couldn't even imagine it before. So, a marvel of design and engineering ingenuity. Skyscrapers require such a huge scale of financial, technological, and logistical resources that it is obvious why they become the last extravagance of a mega bull market cycle. Finally, they become affordable. Well, they're actually affordable in the eye of the beholder. Not needed in any functional way, the tallest skyscraper rather becomes a fitting coda and a state-of-the-art time freeze of wealth and technology. And the next chapter says, size increases as a bigger is better phase unfolds. Cruise ships impossible to fund during recessionary times invariably appear as the economy improves, and blah, 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 blah. And that goes back to the Chapman market line of when? Wow, I forgot when that was written. August 1985. I'm going to say that again. That was nearly 20 years ago. And nothing changes. I love that because you could have written that in the 1920s. So I can put that newspaper away and actually read the newspaper. It's got all those different building heights. Now let's go to something that I think is going to be extremely important coming up. First of all, I've got that indicator that says it's still outstanding for today and tomorrow that there has already been a 7 to 9 point E-mini rally. But that usually just kicks right in and it follows with the stock market. I can only tell you that if the market closes down more than 60 points in the Dow today, more than 7 points in the S&P, that is going to be a really serious statement, and it's going to say that there are conditions now extant in the market that are looking at a change of tide, even if it's just shorter term to intermediate term, whereby every single nuance up until INDU, the peak E-top at 15,542 on May the 22nd. Let me type that in, 5/22/13 of May the 22nd. From here on, the tide has changed, and until you get a decisive turn in that, until you go to low tide, the tide is not going to change. If there is a counter-trend rally, I call it a counter-trend rally, going back to the up channel, those beautiful up channel, remember the inside track and the outside track that I talk about, and that track saw the price pierced yesterday. And there's now potential maybe for a doji bottom with a rally. The rally could go to 15,145. It could go to 15,170s even. At that point, that former up-channel support inside track becomes resistance. So, and the MACD is still very negative in the daily. The on-balance volume is holding really well. That's just a clue to say there's still a little internal strength. But the stochastic's now at 15%. And what you want to see is that for the stochastic to reverse sharply with the price and to go over 20% for there to be more than just a one-day pop. It needs to be 3-4 days. And even then, I would have to draw that same H pattern that I was talking about before right in there. Now, sometimes the H patterns work, but they don't work to the price point that I draw. For instance, if you look at the GLD, it's absolutely remarkable that the GLD has been in the sideways move, but has not broken the 130.51 low that was established the day of the 15th of April, where I said the volume spike that we are seeing right now, and I said it that day and the next day, confirmed it the next day, I needed to wait for the next day to see a higher low bar to get this particular technique that I've developed over the years. I call it a climactic volume spike. It's a low bar spike, actually. Says that you could be a rally not of significance in price, maybe more in percentage, but it's of time, and a rally that can take you, remember I said maybe 28 bars, you can even go to 38 or even sometimes even 52 bars without coming back to retest for a very important retest in this case, the 130.51 area. And yet we've been walking the 9-period moving average here, hugging it, not being able to break. And the stochastics rallied to 67% of the GLD daily. The MACD is moving up. The histogram, those little vertical lines, moving up. And yet there's absolutely nothing. There's no sign of strength. And I keep getting asked by subscribers, well, why again do we own the GLD? It's not the GLD. We own a little mini GLD. Why do we own this? I said, because all I can say is that it's moving. We've got a call from Mike, and I don't believe it. Does that say South Africa?
South Korea.
Oh, South Korea. I was just going to say, because I'm originally from South Africa. You're in South Korea. Oh. That's interesting.
How you doing, Basil?
I'm doing well. How are you?
We have met before.
We have met before. Where?
In San Francisco. I'm the McDonald's Mike.
Oh! Hi, Mike.
From Oakland.
Yes. Great. What are you doing over there?
Basil?
Well, what are you doing? What are you doing over there?
I have been living in South Korea for about 7 years now. It's just that when we met, I just happened to be home at that time.
Oh, okay. Got it. So, it was great. I loved meeting you, and, that's very exciting. Good. So, you'd like to look at?
Well, I told the nice gentleman, the spies, but I'm in the SSO, because I was looking for a bounce. I'm just asking you, you were talking about 7 points in the S&P.
Yes.
It's 1 o'clock. It's almost 1 o'clock in the morning here, and I don't like going to bed with the sun without a good stop. So you know what I'm saying?
Okay.
I'm just because I can't stay up all night here.
I understand. Yeah, I know exactly what you're talking about. I remember when I was in Australia and I had to do my market call and everything. Actually, that worked out perfectly because I was free in the day to do what I wanted to do, and then it was the nighttime and the very early morning. So the SSO right now is the ProShares Ultra S&P 500. It is sitting right on the 200-period moving average. The slow stochastic in the 120-minute chart has made a W formation. For the very first time, the MACD fast-moving average is just flattening out. The histogram is starting to rally, but it hasn't gone. It's at minus 0.20. It hasn't gone positive. If ever there was a moment that said, right here is the cusp.
You got to move. You got to do it now.
You've not only got to do it now, but you've got to clear 7810, which is the 9-period exponential moving average resistance. You know, you're able to put the stops in, is it right? You could go to sleep and say, these are my stops, and if I'm taking out, I'm taking out. What you really would like to do is to be up as a source to move so you can raise your stop, and then you can go to bed and say, okay, now do whatever you want.
Okay,
but
so I'm looking at the 2-hour chart, and we're bouncing right off the 2-hour chart is what you're talking about.
That's exactly what I'm saying. That has come down. It made the double top formation. It's actually, you remember I was talking about in the CD, I've got these different techniques. This is the right shoulder failure where it ran up. The SSO went to, on the 28th, 11:30, it went to 81.11 and then failed, and then the rule of this is that if it breaks the low bar, you can have a measured move to the downside. Okay, I tell you what, now I do hear the music. If you can stay up for just another few minutes, I'm going to do a certain analysis that'll tell me exactly.
Only for you, Basil. Only for you.
Okay, I'll do it only for you then. There's the deal. Hey, Mike, I'm going to go to the 10-minute chart into smaller durations. I'll be back with an analysis.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. We're back with Mike in South Korea. And what we're looking at is the... I'm sorry, what?
We're looking at a 2-hour chart, and I'm looking at that doji that's just in the air above the 200 EMA there on the 2-hour chart.
So now let's just do this. I've got here the, this is the ESM. I want you to go to the SCO. I'm going to go to the SPY, if you don't mind. You're using the SPY as a route in any case, right? So what I'm doing, you see the flatness of this move, it's disconcerting because the MACD rally, the stochastic rally, and yet the price hasn't got... You know what I'm going to recommend? Because the risk at this point is great, while you're not there, is greater. The chances of being stopped out are greater than the chances of moving. In another hour, it might be different. It's just opportunity you're going to miss. Besides which, if you're trading counter to the main trend, you don't want to be asleep when you trade a counter to the main trend. If there is a really... you know what I'm talking about? Because if there is a real ugly down move after this, then then we're going to have folks just giving up. And we're already just at the start of a turnaround. This is like, what, the third, fourth, fifth day or something that we're coming down? This is nothing. So if it's going to be a big move, I'm saying it's nothing. So my recommendation is I would exit the trade, I'd go to sleep, and I tell you something, if tomorrow there is an acceleration in the morning on the upside, that's a trade that I would recommend that you play, but I would rather you miss the opportunity than just to get taken out for, even if the
SSO.
Oh, is double. It's so quick that you're going to lose something. I would prefer that you just keep that money, call it opportunity missed, case closed, that's it. In fact, because you're thinking this way, the chances are that you had a choice of thinking, should I reshort or should I go long? And when you're in that ambivalent position, step aside. If there isn't absolutely a clear trade, step aside. So I'm going to say, hey, have a good night's sleep. Let's look at it together tomorrow and see what's happening, because you could have a perfect trade for a really strong bounce for Monday morning. So let's just, hey, great to meet you, and it was great to hear from you. Have a great sleep. Have a speak to you in the morning.
Thank you, Basil.
Oh, and take 2 aspirin, and I'll speak to you in the morning.
All right. Thank you. All right. Bye-bye.
Thank you, Mike. So that was Mike. We were looking at a fairly quick trade. Yes, it's holding the 9-period moving average. My suspicion is it could go a little underneath the spike, could go to maybe 160.54, and maybe then you get that turn. Hey, this would be one of the first times that this particular technique, the Chapman wave trend gauge, would miss in I don't know how long. So, and it should miss at some point. So I'm just going to say, hey, I don't mind if it misses. I just don't want you on the wrong side of the trade. So now I had a quick question. You've got the XLU. I was talking to someone earlier in the day. XLU, this has been just an incredible move to the downside. The XLU is the S&P Select Utility Spider Fund. It's plunged from 40. It was just the great winner of 2000. Oh, for a long time, not just 2012, but 2000 all the way from 2010. So a spectacular move, and it has these tremendous drops. But the drops invariably that month go right back to the move, back to the upside. I think this is peak D in the utilities, S&P Select Utilities Spider Fund. It's a peak F top in the weekly, and a G top at 41.44. It's getting real close to a bounce. I would be real careful. I had a quick question about the dollar. I'm a little behind on the dollar in terms of the dollar. I said before, I think the target is between 81.58 to 81.33. That's my downside target. And in fact, the price time match would come in between tomorrow and Tuesday. Folks, thank you for being here. Stay tuned. Fabulous show coming up with Larry Pesvento. Great shows all day. I'll be back tomorrow.